This is 8-Minute Market Structure by Texture Capital, bringing you concise, expert insight for better markets. And now your host, Richard Johnson.
Hello and welcome to the latest episode of 8-Minute Market Structure, where I speak with industry experts and get their take on the most important market structure issues. It's a simple format, the same question for each guest. If you were building a new market structure from scratch and could change one thing, what would it be? It's one topic, no prep calls, just 8 minutes of concise expert insight for better markets. My name is Richard Johnson. I'm the founder and CEO of Texture Capital. We're a FINRA member and SEC registered broker-dealer specializing in digital asset securities. We help our clients more efficiently access private markets by providing tools for tokenization, issuance, and secondary market trading. Today's guest is Curt Engler, someone I've known from the industry for probably close to 20 years, I'm afraid to admit. Curt has spent 9 years as head trader of the Americas for JP Morgan Asset Management before he moved to Hong Kong, where he ran equities trading for Citi in Asia Pacific. He has also held senior roles at BlackRock and Northern Trust. So I'm super excited to have Curt on 8-Minute Market Structure, as he brings a unique perspective of both buy side and sell side and global trading issues. So let's get into it, Curt. Thanks for being on the show. Let me ask you the question. If you could change one thing about market structure, what would it be?
Thank you for having me, Richard. I can take your 8-minute market structure and turn it into 8 seconds and say I wouldn't change anything.
All right.
No, I'm being silly on purpose, because if you try to change one thing, certainly in the United States, if you try to change one thing about NMS, everything is so interrelated because of all the intertwined financial complexities, where you have for-profit exchanges making a pretty lucrative data business, and you have broker dealers who have pretty high BC&E costs. That tension there, that back and forth, if you try to change one thing on access fees or market data, you just end up with a food fight. So it's really difficult just to change one thing. And meanwhile, you have investors, whether institutional, retail. Retail is probably the main group that can't complain too much about the current market structure, given that they trade for essentially free. But from my institutional buy side days, just that complexity. I always said that within that complexity, there's some opportunity, but your point of trying to change market structure, I think you either need to completely wipe the slate clean and have it be more of a utility, the execution part be more of a utility. Exchanges do other things like listing standards and what have you. But to try to change one thing is extremely difficult.
Well, that's a bold statement. You must be in a group of one people who loves everything about market structure, from payment for order flow to high frequency trading to tick sizes to all the rest of it. So congratulations, Curt. Very impressive. To highlight that, I guess you're talking about equity market structure as well, which is probably the tip of the spear in terms of kind of efficiency. But notwithstanding, lots of people do find many things to complain about. So, what you said kind of makes me think of, going back, what was it? Maybe 8 years ago, I think the SEC did try to tackle this issue that you're talking about, that it's a complex fabric of interconnected policies and participants and so forth. And that when you move one, all the others get shaken up as well. So, I'm thinking about the old holistic review of market structure. You remember what I'm talking about here?
Yeah, absolutely.
Do you think that's worth revisiting then, where we take a look at all these things, like a convention, as it were?
Yeah, well, again, I think it's a worthwhile exercise to look at that, and it kind of helps bring, at least to some investors, a little bit more transparency on how complicated it is and why we are where we are. A lot of these things were driven out of complaints from retail many years ago, and as well as technological changes. So on one hand, not to be cynical, but if I were a regulator and I hear everybody kind of complaining, I almost think I did my job okay. because there isn't one group that is so happy about how things are. For all the negatives, and again, there are plenty of things to try to change. But again, if you change that, you're going to upset either investors in exchanges. The sell side is certainly challenged with their high costs of managing the business. So a holistic review, I think, is worth the time. But again, to actually try to implement change is just extremely messy. I'm not saying that it's by no means perfect, but anything would be, kind of at the side. So on the positives, we do have, it operates fairly efficiently given all the complexity. It's very resilient. If you have a single point of failure with, and as it's happened in, other parts of the world, there is no trading, whereas there's plenty. Some may argue too many, with how many, I'm losing track of how many
16 exchanges. Yeah.
There you go. If one of those goes down, there's, a few more backups, but the overall cost to the system is being borne somewhere, somehow. And I think if the review kind of looked at that, how the technology these days, data shouldn't cost as much as it does. So I do think that there's probably some technological fixes, but probably that's going to come more around, and again, you have so many people complaining about the cost of data and the governance of that. But the construct is, look at what the brokers did. They started their own exchange and theoretically kind of have a seat at the table of any of the governance around, market data. So it's a long, messy process, but at least there is a process. And compared to a lot of other parts of the world, the amount of innovation in the United States it starts in the United States and then kind of goes elsewhere, not all the time, but quite a bit. The amount of competition and innovation, there's a lot of pluses. So rather than everybody kind of complaining about how bad our system is, while there are a lot of, and again, I was being my hilarious sense of humor, there's plenty to work on and fix. It's just extremely complicated.
Yeah, no, I hear you. So I'm gonna, part of the reason I started this little podcast video series is because I wanted to collect ideas on how to build a new market structure. I feel that that's what we're trying to do at Texture Capital. We're focused on digital securities and private markets where there's very, very little infrastructure. So let me turn it around. What ideas do you have? What advice do you have from being a buy-side trader or sell-side trader, being in Hong Kong or sitting in Chicago or New York? What advice would you give me? What things should I build into the market or not build into the marketplace we're doing here?
Yeah, well, I've thrown around the word complexity a lot. So I do think keeping things, oftentimes we overcomplicate our lives in general. I think trying to keep what's the purpose? What are you trying to accomplish? And then come up with the simplest solution to that. Yeah. Granted, the path of where current equity market structure is, started with a very manual, voice, system, and it's had to kind of change with the technology and the regulatory backdrop. So by trying to make it as simple as possible, and and a lot of the promise that the crypto and digital world has is, trust is difficult to come by, and if the technology can embed no need for trust, it can operate in a way that you don't have to worry about counterparty risk and what have you. So simplicity would be the easiest kind of thing to keep in mind as you're building it out.
Yeah, well, I appreciate that feedback, Curt. I think a lot of the time blockchain is far from simple, but our job is to make it simple for the users in the marketplace. And yeah, you're right. I think there are a lot of benefits we can bring, whether it's around transparency, automation, settlement, governance, things like that we're working on. So we're out of time. We can keep talking about this. It's always a great discussion. But thank you very much for your time, Curt. And hopefully we can continue the conversation on Twitter and LinkedIn.
Thanks very much for having me. I enjoyed it.
Thanks a lot. Cheers.
This has been 8-Minute Market Structure. Be sure to follow Texture Capital on LinkedIn, where we will release a new episode every week. You can also find us on Twitter at texture_capital and on the web at texture.capital. The foregoing discussion is for information purposes only and does not constitute a solicitation to buy or sell securities. Private securities offerings are not registered with the SEC and are considered highly speculative. An investment in private securities may result in the loss of your entire capital contribution. Blockchain is a new technology and unproven in financial markets. There is no guarantee that tokenization will enable any secondary market liquidity in the future, and your investment may remain